I'm back with something good for you today. I took some notes and I want to share them with you. This conversation simplifies so many things that ordinary people like you and me can do to build wealth. Do you ever feel like money is confusing and fair or only for the rich? Well, you're not alone, but today, I bring some good tea. I'm going to highlight some 15 powerful money rules that anyone, even with a small income, can use to build real wealth. These are not theories, they are practical, proven steps that can help everyday people become financially independent. I truly believe so. By the way, the guest was J.L. Collins. Have you heard of him? If not, I'm here to spill the tea money on valuable tips you can use to grow wealth. So, we begin with the three core principles of building wealth. One, avoid debt. Live on less than you earn. Invest the surplus. There's nothing money can buy that's more valuable than financial freedom. These are the pillars. Get them right, and money becomes your tool, not your enemy. Next, your lifestyle is the secret weapon. Spending less isn't deprivation, it's a value choice. Choose freedom over flashy stuff. For example, you can drive a reliable, cheap car instead of taking loans for a luxury car. Being smart with money isn't about being cheap, it's about choosing freedom over stuff. Would you rather impress people or be free to walk away from any job or stress? Next, don't fall for financial complexity. You don't need complex investments. This was really eye opening for me. Wall Street sells confusion. You can ignore most of it. Just stick to simple, low cost index funds. The example he gave was VT Sachs, the total US market. So every CEO in those companies is working to make you richer. VT Sachs, it gives you ownership in every major US company without the hype. Later on, I'll tell you what he means by hype. Huh? In my other channel, I break down different investment tools like VT Sachs. Make sure to check it out. Aha, we move on. Next, financial independence isn't about income. Did you think you're not financially independent because of the income you make? No. Even people earning 40 to 50,000 a year can achieve it by following the basics. So he gave an example of a migrant fruit picker who became worth half a million, and others who have done it just making 40,000 per year. So it's not about how much you make, but it's how about how much you keep and invest. So we must be on point number 5, okay? Avoid keeping all your wealth in one company. Even giants like sales or Google fade eventually. Never put all your eggs in one stock. His advice was to diversify through index funds. Also, don't hold too much in your employer's stock. Again, he cited the example of Google or Amazon. Every company fades eventually. Diversify instead. It's just about being smart, thinking ahead. The precious few coins you get. Next, when you get that first $3,000, what do? Skip the hype. In his opinion, get rich quick schemes and crypto are just hype. I don't know if you'll be of the same opinion about crypto being just hype. Share your thoughts in the comment section. Instead, he advises go for Vanguard or Fidelity, buy VT Sachs. That's your ticket to freedom. So open an account with a broker, Vanguard or Fidelity, and invest in VTSAX. Start simple, stay consistent. Okay? So the first $3,000 you get, don't spend it on flashy stuff. Next, never try to time the market. You can't predict the top or the bottom. You can't predict how it will move exactly. So just invest consistently and let time do the heavy lifting. Even pros fail at market timing one time or another. So instead, just invest regularly and buy more when the prices dip. Another interesting take was that Bitcoin, NFTs, gold, and the rest are speculations. They're not investments. Huh? Are you of the same opinion? I know of people who make good money trading gold. So maybe somehow they are. I don't really agree. I don't know. What do you think? Well, he says speculation is not investing. Investments like index funds generate wealth through business profits, not hype. Bitcoin, gold, and NFTs are speculation, but index funds invest in real businesses, creating real value. So share your opinion in the comment section. Hear this, hear this. I don't know how this will rub some people. This is what he said. You don't need a financial advisor. Mm-hmm. Okay, got it. So most advisors are expensive and offer no better results than index funds. What? I don't know. What do you think? According to him, you don't need to pay the 1 to 2% in fees. Instead, just learn the basics yourself and keep that money growing for you. Okay. Okay. So he says learn the basics yourself, save on fees. What do you think? Number 11, or is it number 10? This is an argument that is making lots of rounds. Huh? I don't know what your take. So he says your house isn't an investment. It's a lifestyle decision, not a wealth strategy. So between taxes, repairs, and remodeling, it eats your money. It doesn't grow it. Because the cost of a house isn't just the mortgage. He insists that owning a house is just a lifestyle choice. Huh? It's not an investment. And his focal point is on real estate, the taxes, real estate taxes, the repairs, the remodeling, insurance, all those things, they add up. Hmm? And get this statement. Are you ready for it? Your house is constantly trying to return to dust. Mhm. So, my 1 million friends, we finally have a solution to irritating car loans. Avoid leasing or financing cars. Buy a cheap car in cash. Pay yourself a car payment into savings for the next one. Huh? You get it? According to him, you'd better drive a crap car now and never make a car payment again. So buy a cheap car in cash, then make car payments to yourself and save for the next one. You'll never have a car loan again. There you have it. Crashes are normal, so stay the course. The market has crashed multiple times. In 1974, in the 2000, in 2008, during COVID, and it always recovered. So some people panic, huh? And it's probably people who don't know how the market behaves. Huh? They panic sell. And even Warren Buffett has a quote that you want to be buying when it rains gold. Therefore, if markets crash and it's part of the cycle, use the crash to buy more, not panic. That's how wealth is made. Next, even if you're not fully financially independent, having savings gives you power because you can leave a toxic job, you can take a break, you can say no when needed. So even before you are rich, having savings gives you choices. You can always leave a toxic setup. You can say no. There must be something good he's getting from the index funds. Because he goes on into indexes again and he says VT Sachs is self cleansing. When one company fades, a new one arises automatically in the index. So you'll always hold the best performers without guessing. Because VT Sachs automatically removes losing companies and adds winners. You don't need to guess the next Amazon. Just own the whole market. So really think about the index funds. Well, I gave you the meat and now I want to hand it over to you. But remember, he says this path isn't for everyone, and that's okay. Most people will ignore the advice he's given and they will stay broke. But for those who follow it, they will be free, empowered, and wealthy. So he shared the parable of the monk and the minister. The minister says, if you learn to cater to the king, you live on rice and beans. But the monk says, if you learn to live on rice and beans, you won't need to cater to the king. Powerful reminder that freedom comes from simplicity, not luxury. That's financial freedom, having the power to choose how you live. So if this helped shift your mindset even a little bit, hit the like button so you don't miss another highlight and conversations you should definitely go and listen in.